Let's bring in Jon Najarian, co-founder of Market Rebellion, which focuses on educating the individual investor. Jon, always good to see you. Good morning.
Great to see you, Hannah. Thank you.
Let's talk numbers. The average 30-year mortgage rate dipping to near 3-year low at 6.19%. It's been over 7% for quite some time. This as inflation last month was also slightly lower than expected. Jon, what does this setup indicate for the Fed's decision in the next 48 hours?
The CME Group, Chicago Mercantile Exchange, they have a tool that does track exactly how many trillions, literally, of dollars in fixed income are betting one way or another on interest rates. And that tool right now says it's a high 97 or 98% chance that tomorrow we are getting that rate cut. That'll be good for those mortgage rates. It'll be good for car loans and so forth. It's pretty much good for anybody who's borrowing, whether they're an individual or whether they're corporate or the United States, because all three of those, of course, are driven by what the Fed does with its interest rates. And I think we're going to see a cut and maybe even another one in the next meeting.
So you do think that these lower interest rates will be enough to boost the housing market. But on the flip side, are there drawbacks as these rates turn lower, particularly for all those retirees who depend on their savings accounts earning interest?
Yeah, there is a little bit of that. But most of those folks are probably in something like a 10-year T-bill, and those T-bills have been stubborn right around that 4% level. So I don't think, Hannah, it's going to be as big an impact on the negative side to seniors and those living off fixed income as it will be a benefit to the rest of the country and, of course, again, to the debt of this country as well, since we do have $38 trillion that we're financing right now.
That's absolutely right. The Dow, S&P, NASDAQ all hitting record highs on Monday. You and I talked over the weekend. We saw the same thing on Friday, a lot of green. Despite these risks to the economy we keep hearing about over and over again.
There's a ton of M&A, mergers and acquisitions, which implies strongly to me that a lot of the corporate leaders believe that there's considerably more upside. And that's why even during the shutdown, the Dow, the S&P, and NASDAQ have all rallied. I think if you get some sort of agreement, perhaps J.D. Vance or the president pushing enough that we get a partial reopening, like you were just saying about Senator Johnson in Wisconsin, trying to get that, I think you'd see the markets really react positively. You could see a 1,000-point rally that day if indeed we even just partially reopened, where government employees, TSA, and all the rest, military, started getting what they should be getting right now.
Absolutely right. Jon Najarian, always good to talk to you. Thank you.